Hi guys, I'm going to be talking to you about inflation. It's a hot topic all over the news as of late. So a lot of people are, worried about it. What does it mean? Well, I'm going to explain real quickly. What is it? What does it mean? What can you do about it? Simply put, inflation is when the price of goods and services goes up and the purchasing price of the currency goes down. In this case, the US dollar continues to go down, the price of goods and services continue to go up. Now, how did that happen? COVID-19, the government printed over $5 trillion, dollars, pumped it into the US economy through the stimulus packages. For 2021, the US GDP is over $22.5 trillion. The GDP is a snapshot of the economy and the growth. So goods and services are continuing to go up. We're in a healthy economy because people have money to spend. Everything is more expensive: cars, gas, food, entertainment. What does it mean? Well, it's very, very bad if you have savings. Very bad for savers. Now, people, especially baby boomers, people close to retirement, people have $100,000 saved, $50,000 saved, $10,000 saved. In 3 to 5 years, that money is not going to be worth what it is today. So, what can somebody do? Well, number one, can keep it in the bank. That means you're going to be losing money. It's not going to be worth the $10,000 that it is today. Can keep it under the mattress, same thing. And what about investing in stocks? So, hey, Matt, I'm buying Facebook shares of Facebook. I'm buying, you know, shares of Tesla. What is that? Well, super high volatility. I wouldn't recommend it, but hey, to each their own. Prices could drop. Price of Tesla can drop from, let's say, $3,000 one day to $1,500 the next day. Somebody put $10,000, now they have $5,000. Is that a risk that somebody's willing to take? Not me. What about Bitcoin? Super high volatility. Now, I bought Bitcoin when it was $350, $500, $1,000, $10,000. I bought Bitcoin, but I know that it can drop any moment. Right now, it's like $50,000. It can go to $20,000, like that. It's not something that I'm going to be putting a whole lot of money into it. Now, if I had $100,000, my last $100,000, I'm not going to put in Bitcoin. I'm going to be putting it somewhere else, and I'll tell you right now. What about gold, silver, ammunition? Now, historically, gold is the main hedge against inflation, but really, it's kind of steady. It's not a whole, doesn't go up a whole lot, doesn't go down a whole lot. Same with silver, doesn't go up a whole lot, doesn't go down a whole lot. Now, you can't really do a whole lot with it. It's hard to store. It's probably better than keeping the cash, keeping it at the bank, keeping it under a mattress. It's probably better than that, but not a whole lot better. So, what does somebody do? Invest it in real estate assets that produce income. Again, invested in real estate assets that produce income. Now, our firm, Principal Quality Investments, invests in commercial real estate assets that produce income. Investors are able to invest alongside us into these deals, and we offer 5, 7, 8% preferred return per year on the cash invested. So what that means is that if somebody put $10,000, they can expect to receive, let's say, $8,000 on their cash invested. That already is beating inflation. 8%, let's say, preferred return on the cash invested, plus whatever the property is going to be increasing in the NOI is going to be going up, because with inflation, remember, the price of housing is going to go up. The Too many people are bidding on one single property. Right now you have one property and there's 10, 20 buyers trying to buy that one property. What are sellers doing right now? They're asking for more. they're creating bidding wars. Not everybody's going to be able to purchase that property. Now, lumber, aluminum, water, labor, everything is more expensive right now. So it costs more money to build houses right now, new houses. What does that mean? The price of the new houses are going to go up. Less people are going to be able to afford to buy them eventually. The Fed already said that they're going to be increasing the interest rates for 2022 at least 3 times. If somebody was able to borrow 300,000 to purchase a home, well, now they're not going to be able to borrow $300,000 to purchase a home because the interest rates are higher. More people are going to be needing to rent, which means the prices of rental homes are going to be going up. That's another 3, 5, 7, 10% on top of the 8%. Now, if you watch my other video, you know that when the NOI goes up, the property value goes up because it's all based off of the income. Now, if the income goes up on the property, the value goes up on the property. So now you're not only beating inflation by getting the 8%, and then plus the rent increases on top of that, 5, 7, 10%. Now you're also getting equity in the deal. Building equity in the deal, what we do then is refinance at that higher price, put long-term debt, pull the money out of the property, investors get their investment back. Now investors have zero money invested in the property, still getting that return, zero money invested, can go put it in another real estate property that gets return and build wealth. This is how people build wealth. That's not even including depreciation. Depreciation is one of the biggest reasons to invest in real estate. Now somebody that has a job 20, 50, 70, $100,000 a year, now they get depreciation. On paper, they can show that they made less than what they did, pay less taxes to Uncle Sam. Nobody wants to pay more taxes to Uncle Sam. And just another added benefit for owning commercial real estate. Anyways, guys, that's all I have for you. Go ahead, like, subscribe, leave a comment, and let me know if you have any questions.